Hey, this is Sasha. Thanks for joining me in today's video. And what I want to share with you today are 3 things that rich people focus on, and it's not their money. So stay tuned. I'm going to open up your eyes a little bit. All right, so you might have said, hey, I've already heard this before. I already know what rich people focus on. But what I want to share with you is a little more thought-provoking, and it might give you some insights to really open up your eyes for the future, whether it's your job, whether it's your schoolwork, how you look at the world, and how to really ramp up, and the key things to focus on that'll build wealth in your life. So here's the key thing I want you to think about. You might say, hey, a lot of wealthy people, they focus on, investing. That's what they do. They focus on investing. And although this might be the initial case, really they look at assets that appreciate and value. That you may say, hey, that is investing. So whether it's real estate, they go ahead and get into real estate, so that way it goes ahead and appreciates in value over time. Or they go ahead and buy a business, so that way that business generates them income and money and appreciates over time. But they don't go out and buy, let's say, a $20,000 or $100,000 vehicle thinking in mind that that is going to make them more money. No, that's what a typical teenager is looking to do. In high school, you want to go ahead and buy a fancy car so you could go ahead and look cool in front of your kids. That's the kind of the social problem that we have. But unfortunately, that asset depreciates in value. Whereas the wealthy, what they look at is assets that actually appreciate and grow in value. It's going to grow their money. So it's not about, let's say, hey, I want to go ahead and buy a new jet ski. I want to go ahead and buy a new car, a new Rolex, a new watch, that kind of thing. What you're looking at is what is going to appreciate in value over time. That's the difference. Assets, liabilities. Assets grow in time. Liabilities, they depreciate in value over time. We're not talking about accounting and financial terms, right? Those things are different. We're talking about wealth building. So I know if you're a personal accountant, bookkeeper, that kind of thing, those are separate things. We're looking at building wealth. Assets go up in value over time. Liabilities go down in value over time. They depreciate. And the point behind this is looking at things that appreciate in value over time is that the sheer fact of money itself goes down over time. So let's take a look at here, money on its own. If you look at something like this, just look at the value of money across multiple years. What's been happening is it's been depreciating. Basically, when you look at prices overall, let's just look at here prices. What they've been doing is skyrocketing, right? So if you look at price of things, it's been skyrocketing. This is why the stock market is so high. You might be thinking, well, the stock market's still going up. Well, yeah, the stock market's going up because prices continue to accelerate. And if you really want to know more about the stock market, check out my other website, tradersfly.com. We've got a YouTube channel all about that, where you could really learn a whole bunch more about the stock market. There's tons and tons of videos here that I have all about the stock market. So anyways, check out this channel. There's a lot of great tips. So anyways, my point being here is that when you look at this, is that money over time, it basically depreciates because price of things continue to go up. And if you look at basically the Big Mac index, so check this thing out. This is called the purchasing power parity. They use it more for currencies and that kind of thing. But when you think about it, buying a burger, you got lettuce, tomatoes, pickles, bread, the meat, pretty much the same stuff. It talks about the power of that. Now, some people, they go ahead and use this also for purchasing a house, right? So purchasing a house in the 1980s, 1990s, let's say a burger, costs the same. So how many burgers does it take to buy a standard average home in, let's say, the 1990s versus in the year 2020 or 2030. So you can see the disparity here that happens as you think about, because the stuff that in components that makes a burger is still the same. And what's been happening, burger in the 1950s costs a lot less than it does now. And even some burgers, you go to Las Vegas, they're like $1,000 for a lobster burger and that kind of stuff. But that's extreme luxury. My point being is that money over time depreciates. And when you look at the rich and wealthy, they focus on assets that appreciate in value. So that's the key thing to remember here. Now, the second thing that you want to look at is really you're looking at investing in their own education and knowledge. Because the more knowledge, the more education you have, it's going to give you a much better return on investment. You'll be more knowledgeable on where do I put my money? How do I put my money? How do I protect myself from bigger losses? Let's say you're investing in the stock market or investing in a business. Well, if you don't know what you're doing, your knowledge and education is poor, well, you're probably going to lose out the money that you invest. You put in, let's say, $50,000 in business. Well, you might get out 40,000 of that, and you lost 10,000. So that's the thing. More knowledge, more education, more insight is going to appreciate the things that you are investing in, the things that you are looking to appreciate and grow wealth in. So having a good set of knowledge and education is going to set you apart. Now, the third and kind of next big thing is investing in relationships. So let's say you don't have the knowledge and education, but you know someone that does. So having a relationship, good quality relationships, builds connections. It builds connections to business. It builds connections to your career. It builds connections to opening the doorway and pathway to new opportunities that may come your way. So investing in relationships is also a key component. Are you, for example, reaching out to people who are higher level than you? Maybe are a step or two above. Are you trying to connect with them, to integrate with them? Now, you may not like that concept, but this is the way, think of it like big banks. Why do big banks get the business? It's because they're powerful, right? They have exposure. They have the marketing. Why is it that, big YouTube stars land the big brand deals? Everything seems to suck and funnel to the bigger things. Well, it's because they know people. And that's just the nature of, the cycle that we're in. If you're at the lower level, it's tougher to scrape out of it. It's tougher and tougher and tougher. But if you can get someone that's a few levels up, and a few levels up, you can slowly rise up a little bit. But again, it is tough. It's a tough industry, whether you're dealing in business, whether you're dealing in the finance space. Sometimes what you could do is go ahead and make a connection by just paying for someone for a consultation for their time. And all of a sudden, you've got that connection. You've got that one-on-one relationship. And that could be a huge win. So it might be a better approach to look at things in that way, to paying for their time. And now you've got an in. So think about that. Anyways, these are kind of the three main things that I want you to think about. And, when you're looking at it, investing in relationships is another big one. Because overall, if you are just focusing on money, saving money, it just depreciates over time. Focus on these key things and you'll be way light years ahead of most people. Now, one final thing I want to share with you is remember to go ahead and go to the MyLittleNestEgg.com and check out some of the freebies that we have on there. There's a lot of great stuff. If you want to check out the trading and investing channel, just go to tradersfly.com and there's a bunch of stuff we have on trading and investing. So check out that channel. And as always, thank you so much for joining me. Feel free to grab those freebies, check out other great videos, or subscribe to the YouTube channel if you're brand new. Thanks again, and I will see you next time.